Once again, welcome to our program. This is a series dedicated to giving a hand-holding session to 400 level students, to graduates awaiting NYC, for those who are on NYC and those who have just completed the NYC as they try to transit into the real life or practical world. That is the essence of this session. It is targeted at giving them a hand-holding, a guidance on how to function in the real world, because we know there's a difference between the reality in the four walls of the academic classroom and the reality in the job places for those who want to practice as accountants or in any financial capacity or even in task capacity of professionals. That is the essence of this session. So once again, welcome all of you. So today we'll be talking about charts of accounts and accounting software. Charts of account and accounting software. If you look at this was the flyer we shared. This was the flyer we shared. We just a second. Let me see how I can share that once again. Okay, but when you logged on, you saw it anyway. You saw it on the. Maybe if I even off my video, what you see that pops out. Yeah, that is what you see on my display, charts of accounts and accounting software. So let's go ahead to the business of the day. What is the chart of account? What is the chart of account? I'm going to want every one of you to please stay with me as we go along the way. Simply put, you may note, you may just listen in. Of course, you can always go back to this recording. A chart of account is a collection of all the accounts that are used or that are designed to be used in the posting and extracting of information for financial reporting purposes in an organization. So that is what the chart account is. It's a collection of all the accounts, right, that serve as the basis for posting of transaction and the extraction of information for financial reporting purposes in an organization. That is what the chart of account is. It's an architecture of all the accounts that are used in an organization in posting transaction and extracting information for the purpose of reporting. That is what the chart of account is. So when we post transaction, when we say debit the receiver, credit the giver, that is what we do in classroom, right? We say debit the receiver, credit the giver. We say in a cash book or cash account, what do? When you make a payment, credit bank and debit this and credit that, or credit this and credit that. You know, what you do in classroom most time, actually, what you do flows from the foundation, which was in the manual era when accounting originated. So we post manually by debiting a certain account and crediting a certain account. That's what we do. But in the age we are now, it's all about ERP, electronic resource planning. ERP or an ERP software is a software that enables the processing of all information of all kinds, covering all functions of a business using software. So that is why we call it enterprise resource planning software, ERP software, enterprise resource planning software. So in the era we are, we use software to process all categories of information, all categories of transaction, all categories of data that are generated or that exist within the operation of an entity. So one of those data, and actually the origin of those software that was first put to use was an accounting software. So we'll talk about the accounting software. So accounting software is that software dedicated for the processing of financial and accounting transaction in an organization. It is a platform, it is the framework, it is the electronic architecture that enables the processing of all accounting and financial transactions in an organization. Therefore, manually, while you were taught debit the receiver, credit the giver, or credit the giver, debit the receiver, while you are taught how to debit and how to credit, how to pass reversal of entry in the manual approach. In the era we are, and in the era of software and even artificial intelligence, what we do is the deployment of software to pass those entry. In other words, an accounting software is a software dedicated to capturing transactions, to capturing accounting records, accounting recording of transaction or developments or activities in an organization. So rather than you doing it manually by debiting A and crediting B accounts, by posting that transaction in your software, the software automatically debits and credits the relevant accounts. And not just that, the software is a set of program already done that enable you to extract your report at any point in time. You don't need to post a trial balance. You don't need to draw a product. You don't need to drop your trial balance. No, you don't need to. You don't need to draw up your income statement or your statement of profit and loss and other comprehensive income. You don't need to do that at all. So by posting a transaction, their profit accounts are debited and credited. A report module is available in case you want to generate or spool the report, right? And other financial analysis modules are available. Maybe you want to check the amount of trade receivables, aging analysis. What are the gradings of your receivables? How old or how outstanding are your receivables? You want those that are 30 days old, 60-day old, 90-day old, or you want those one that those accounts or those receivables that explain the highest number of turnover, for example. These are the various report formats that exist in a software. So this is why we are here. Why you've been taught about the accounting entry, where to debit and where to credit ordinarily. In accounting software, where to debit and credit already exists. I repeat, where to debit or credit already exists. It exists. So it means that in the practical world, let's take note, there won't be an account to debit or credit manually. Rather, there are collection of accounts in accounting architecture, which is the chart of accounts that is inherent in the software an organization uses. Therefore, the first step we need to get familiarized with is to learn the various accounting softwares. When we learn the various accounting software, we get accustomed to, we get used to the nature of the chart of accounts that exists in the software. But before we go to the software, how is the chart of accounts structured? What is the architecture of a typical chart of accounts? Now, I want to take you back to your year one when you were taught type of accounts, and ledgers, if you recall, types of ledgers. Now, generally, if you recall, you know we have the personal ledger and the impersonal ledger. Personal ledger and impersonal ledger. Another name for the personal ledger is what? General ledger, if you remember. So we have the personal ledger, we have the general ledger. The personal ledger is the ledger that deals with transactions concerning individuals, persons, that deal with transactions concerning individuals, persons, institutions, companies, and organizations. That is the ledger where we record things concerning persons, individuals, institutions, organizations, companies, other business entities, or other parties that deal with organization. Their transactions are recorded under the personal ledger. Now, the general ledger is a ledger dedicated to recording all other transactions whose emphasis is not on the person or parties that carry out the transactions. I repeat, general ledger is that ledger, general ledger or impersonal ledger is that ledger where all other transactions that do not reflect emphasis on persons, individuals, institutions, organizations are recorded. In other words, general ledger deals with all other recordings other than those ones that deals with individuals, persons, organizations, businesses, institutions, and other dealing parties. And that is why in the general ledger, also known as the personal ledger, it is divided into two, if you remember. It is divided into two. We have the real accounts and we have the nominal accounts. If you recall, we have the real accounts and the nominal accounts. The real accounts are the accounts, the real accounts are the accounts for assets other than individuals, companies, businesses, organizations, and other dealing parties. So real accounts are accounts for assets other than, you see the condition, other than individuals, persons, organizations, institutions, companies, business enterprises, and other dealing parties that an organization, transacts with. So, primarily we say real account dealing with what you can touch or see, but not just that. For example, intangible assets is a real, comes under a real account. But intangible assets, like the name suggests, are intangible. You can't touch them, you can't feel them, but they exist. They are economic resources. They generate future economic benefit and organization, right? So it is very elementary to just say real accounts of those items that can be touched or felt or seen, right? So we say real accounts are those accounts that deal with assets other than those assets concerning individuals, persons, companies, businesses, institutions, organizations, and other dealing parties that an entity engages with. So that's under real account. I'm trying to break down the general ledger, also known as the personal ledger. I've said we have the real account and we have the nominal account. So under the real account, example, in the example of you have your inventories, you have the motor vehicle, you have your building, you have your plant, you have your machinery, right? So you have your accounting software, you have your biological assets. All of those are intangible assets. All of those are investment properties. All of those will come under real accounts. Now, what are nominal accounts? Nominal accounts are accounts for the recording of income and expenses. Simple. Nominal account is an account that deals with the recording of income and expenses. So any kind of income you want to imagine comes under nominal accounts. Any kind of expense you want to imagine comes under nominal accounts. So nominal accounts and accounts for the recording of income and expenses. So power, transactional expenses, insurance expenses, commission expenses, revenue, sales, interest income, interest expense, commission receivable, any form of item that is either an income and expense comes under nominal accounts. So you notice that nominal accounts are not accounts about assets at all. No, they are not accounts about what? Assets at all. But real accounts are accounts about assets. Apart from those assets that have to do with individuals, persons, companies, businesses, organizations, institutions, and other parties that our entity deals with. So see the difference. So both the real accounts and the nominal account together make up your general ledger or your impersonal ledger. Now we now go over to the personal ledger. The personal ledger, like I said, as the name personal, right? Having to do individual, person, institution, organization, business, and all of that. It is divided into two. Yes, you have the account, we have what we call the receivables and the payables. Receivables and the payables. Those are the two collections. What is the call debtors and creditors, right? So the personal ledger is divided into two, the debtors account and the creditors account. Alternatively, you may want to call the debtors account receivables account, creditors account, you may want to call it payable accounts. So in software, you may hear the term account payables and account receivables. Accounts payable and accounts receivable. So that is another name for receivables and for payable. The one you call debtors and creditors. Those are two subdivisions of your personal ledger. So we've broken down from them what from saying there are two components, the general ledger, also called the personal ledger, and the general ledger is broken down into two, the real account and nominal account, right? And the personal ledger is broken down into two, the account receivable and account payable. Now take note of something. Within your nominal account, within your general ledger, I mentioned the nominal account, income and expense. Now, the summation of your income and expense, I repeat, the summation of your income and expense give rise to what? To profit. When you sum all income, sum all expenses, and find a difference, you either have a profit or a loss. Therefore, your retained earnings is a component of your nominal account. Take note. Capital contributed, share capital contributed, share capital, your reserve. In some philosophy, there's a tendency to classify them as equity ledger or private ledger. Now, the focus of trying to call this equity or private ledger is to reflect that they are not just about income or expense, no. They are not about account payable and receivable. There is standalone set of items that reflect the equity. It flows from the accounting equation, which is equity. You recall, equity equals what? Assets less liability. So you see there are three components generally, right? Equity equals assets less liabilities, right? Assets less liability, or you say equity plus liability equals assets. So you can flip the equation whichever way you want, right? So back to what I'm saying. So there's a school of thought that says anything that has to do with the capital, drawing accounts, reserves, retained earnings, those categories can be called private ledger. But not the border. That is just the equity stake or the net worth, right, of an organization. So that is the by and large about the architecture of accounts. So based on what you were taught about this type of accounts and ledgers, that is the foundation for the designing of chart of accounts. When you want to chart an account, you ask yourself, what are the likely assets that an organization is going to have? What are the likely liabilities? Even under an asset, what are the sub-assets within the category? What are the sub-liabilities within the category? So in chart of accounts, the accounts are not just identified. Of course, they are identified as to whether the account payable, the account receivable, their income, their expense, their asset accounts, right? In addition, an identification is tagged to each description of an account. That identification is called an account code. Account code is an identification, is a form of tagging, a form of mapping associated with the name of an account or an account line item. So if you want to say asset, you may say all your assets start with 2000. That is 2000 under assets. Now in that asset, you don't say, knowing that everything is going to end in the state of financial position, meaning you can say under that asset, we have the one that are non-current assets and the one that are current assets. Stay with me. We said the code for asset is 2000. Therefore, that is 2000. Then the one that are non-current assets, you may want to call them 2100. This is a breakdown of 2000. It's down 2100 for the one that are what? Non-current assets. The one that are current assets, you may tag them what? 2200, 2200. So flowing from 2000, I'm going to call up an Excel sheet shortly, right, to illustrate what I'm saying. Then from there, we are now going to go into the various kind of softwares. In software, you don't begin to build chart of accounts newly, afresh. No, you don't. You don't begin to build a chart of accounts afresh. So a second, as soon as I'm trying to call up and okay, so maybe it's getting up. So I'm going to share Okay, I'm going to share something shortly. A second. Okay, no, I'm sharing the wrong information. A second, please. Okay, so look at my Excel sheet. Look at my Excel sheet. Look at my Excel sheet. I'm trying to do something here. I've just said I'm giving a code to assets. So I said these assets. I said the code is 2000. Under assets, you know, we are going to have non-current assets. So let me spread that out. So this one may be code what? 2100. I come under here, we are going to have current assets, for example. So this may be code 2200. Now, under non-current assets, you know, we are going to have property, plants, and equipment. For example. Now, for this, I may say for PPE, it will be 2110. Then if I come to investment property, it may be 2120. If I come to intangible assets, it may be 2130 in that order. Now, I come to current asset. I say we're going to have inventory, for example. Inventory may be 22, take note, 2210. Now, for trade receivable, for example, for trade receivables, I can call it 2220. For other receivables, for example, if I decide to separate it, other receivables, it could be 2230. If I go to what else there, let's say cash and cash equivalents, right? So it could be 2240. Now, if I go to what else I mentioned another current asset that was not mentioned here? Who can mention another current asset that was not mentioned here? Can someone mention another current asset that was not mentioned here?
Bank.
Okay, under IFRS. Yeah, I can hear you, Senator Hope. Yes. Bank comes under cash and cash equivalents under IFRS, right? Bank and cash comes under under cash and cash equivalents under IFRS. So now let me mention, let's say we're going to have something like cash receivable, current tax receivable, right? So I can call this code 2250. Now, see, this is the catch. In this company, let's assume this is a company. In this company, for example, now when I want to post, someone mentioned account code 221. Before the person finishes 21, you already know that item must be a non-current asset item. When the person mentions 21, you already know it's a non-current asset item. When the person mentions 2211, you already know is a type of an item under property, plant, and equipment. But if the person mentions account code 22 something, 22, you already know is a current asset item. Why? This is how we've chosen to identify this line item, by assigning specific numbering to them. This is what we call coding. The 210, the 2000, 2100, 2110, 2120 are called account code. Therefore, in real life, when you want to post, you don't go and look for inventory accounts. You say you want to debit inventory. You are looking for inventory. No, in the software, there's an account, there's a lookup button or a field where you can type, when by the time you type 222, it's going to spring up the list of all the accounts under that heading. Then you pass your entry. That is how it is done. It is present in all chart of accounts. It is present in all chart of accounts. Now let us go further. Let's say under inventory, you have 4 types of inventory, four classes of inventory. Now for inventory A, how do I identify inventory A? From this 2210 series, you can call it, follow me, you can call it 22101. The next category, 22102. Next category, 22103. The fourth category, 22104. What do you notice? The 5 digits is for the specification of the particular type of inventory. Maybe 22101 is for raw material. Raw material is the type of inventory. 22102 is for work in progress or semi-finished goods. 22103 may be for finished goods. 22104 may be for consumables. Those are inventories that you don't buy or sell them, but you consume them in the process, right? Of running. Maybe your diesel stock, your stationery, all those things are they're all inventories, right? You may be a supermarket, but you have inventory of A4 you use to print invoices, you use to print quotes, you use to print proposal. So those stock of inventory of stationery are part of your inventory. So 101 raw material, 102 partly finished goods, 103 finished goods, 104 other consumables or consumables. So all of these 4 sub classifications, take note, all of these sub classifications are flowing from inventory 2210. So if someone is to post, the person is typing 221, automatically you know it's about inventory. Why? Because no other numbering goes with 221. No other one goes with 221 except inventory. If someone mentions 22, we mean, okay, the current assets. But when you hear 225, you know about your tax credit with the tax authority that you've not received. You know it's about tax credit because you've had 225. So in a chart of account, as I said when we started, a chart of account is the collection of all the accounts in an organization used in posting and processing of accounting transactions, and that serve as a source of extraction of data for financial reporting. That is what a chart of account is architecture, is the collection, is the map of all the accounts in use to which accounting transactions or financial are posted into, and from which data is extracted for the purpose of reporting, either to management or for statutory or compliance reporting. That is what a chart of account is. I went further when we started to mention that what you were taught in class, debit here, debit accumulated, you say debit profit or loss, credit accumulated, accumulated depreciation, right? You do it manually in class. You may use a 3-column style in Excel in class. You may use a T account in class. Yeah, that is the foundation. But in real life and in place of work, we use accounting software. So the first thing you do when you resume in any company is to get a hold, go through the accounting software. Of course, if you're not the CFO, you may not, you won't be given the access to be able to view or post into all accounts. If you're in treasury, the accounts you can post into in treasury. If you are in stores or inventory, the accounts you can post into. If you are in cash office, the accounts you can post into. If you're an internal auditor, very likely you are going to have a super profile. They enable you to view all accounts because you're an internal auditor, right? So if you're in charge of, let's say, yes, receivables, right? You should be able to spool, check customer balances, check the movement in the accounting records or in their history of accounts. So ordinarily, as a CFO, as the head of account or a financial controller, you should be able to be familiar, you should be familiar with your organization's chart of account, knowing all the listings of the account heads and how all those accounts sum up into producing one line item. Look at, I used inventory to illustrate here. I said inventory is 2210. These are the sub-classification of inventory. In fact, let me tell you, within 22101, you know, I gave an example that it could be raw material. Do you know there could be many raw material? Let's assume you are a carbonated drink production company. You produce, soft drinks. Water is raw material. Sugar is raw material. Soda is raw material. Other mineral ingredients, they are raw material. So you can have 12 raw material, 12 components of raw material, which are your ingredients. Because I'm talking about something consumable, right? These are the ingredients. You can have 12 ingredients used in producing your carbonated drink, for example. For those ingredients, within these 22101, that means you may have, if I want to spread it up, you can have 221011, 221011, 221013, in that order, 221014, 221015, 221016, 221017, 221018, 221019, 22101010. For example, you can have these codes. These are sub-classification. 101, okay, yeah, this will be 2. Yes. Now look at this, look at this, look at this. These are sub-classifications. These are sub-classifications of what? Of the raw material category. So in reporting, this is what the software does. We compress all of these type of raw material. When we sum the account balance for each of them, right? When we sum the account balance for each of them, we get one line item. That one line item is the 22101. Is a summary, is an aggregation. Is an aggregation of all the components and sub-components. Even for the work in progress, there could be different states of work in progress. For a drink, probably the water that they mix with sugar, the water that mix with sugar and this and all. So there may be categories. So therefore, a chart of account may be so large and wide. Don't be scared of it. Get used to it. It could be in any numbers. It depends on the composition of the asset and liabilities, sub-composition of a particular asset and liability, sub-composition, 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 in that order. Therefore, the accounts are often developed in such a way that they are expandable. They can expand without getting mixed up along the way. If I mention 221014, 2210 automatically, I'm talking about inventory. Because inventory is 221. Nothing else is 221 in all these series. Look at from here, down here, no line item is 221. So 221 is inventory. Automatically, 221 is inventory. But when I say 221014, it's beyond inventory. I've gone further that it is a type of inventory that is a raw material because it's 2210. Do you get? It's not just 22, it's 221. So it's raw material. It's not just raw material. I said 22101. Right? 221014 is a type of a raw material or ingredient. That's what we are saying. So these are the way we do them. For assets, we do them. For liabilities, we do them. For equity and other, all the components of equity, we do them. So that's how we develop a chart of accounts. So when I say we bought raw material for 20,000 naira, credit bank and debit this. In fact, let me come over here. Under cash and cash equivalent, do you know you have cash in the office still, in the office vault? You have cash in bank. You may have cash in transit. You may have cash in banks, and you could have like even 4 accounts with even one bank. 4 accounts. I'm not even talking about bank A, bank B, bank C. I'm talking even within bank A, you could have 4 accounts. You could have 60-day, 30-day, 90-day fixed deposits. How do you identify them? is the chart of account that enables you to separately identify these items and to post into them accordingly. Therefore, under cash and cash equivalent, this line item we are looking at now, under cash and cash equivalent, there will be cash in the vault, there will be petty cash, for example, there may be cash in transit, there will be cash at bank. Do you see 4 classes even right away without even thinking? Cash in the vault of your office, maybe from there you replenish your Impress cash, your petty cash account, cash in transit, maybe you gave them money reimbursable to your marketers and then they field. When they come back, they retire the account. At that moment, that is cash in what? Transit. And cash in the bank or cash at bank. Then under the cash at bank, you can have the money in your current account 1, current account 2, where you pay salary, from where you pay salary, current account 3, which is where you collect loan account, current account 4, which is where you use in paying your directors' allowances and emolument. You see, in that order. So for each of these line items, for each of these accounts, and the sub and the sub, we identify them with these codes. Many years ago, ab initio, these codes could be done using alphabets also, or using a combination of alphabet and number. We say then it was alphanumeric. But with the advent of accounting software, all of these chart accounts have been pre-designed. Get my word, pre-designed. They're already designed. So, but they enable you to customize. What is customized? You can modify them to suit further peculiarities of your organization. So that is what the chart account is. So in the real world, that you don't draw T to start looking for where to debit or credit. You don't just open Excel and start debiting and crediting. In a working world where there are many accounting software, number one as an accountant, get used to the chart of account in the software you are using. Get used to the chart of account in the software you are using. Because that is where you'll be posting all of those things. But just an information, before you begin to call up an account to debit and credit, guess what? Like I said before, that chart of account must have existed before. Now, I want to counsel, when it comes to account payable and account receivable, we don't just start to post. When you go to the bank to pay money to your account and you've not opened an account, what does the bank tell you? The bank tells you open an account. If you want to send an email, you ought to have an email. When you don't have an email, what do? You open an email account. If you want to go on Facebook, you cannot post unless you have a Facebook account. What do? Open a Facebook account. You want to run a YouTube channel, for example, you open up a Gmail, for example. Same thing, before you post into any account payable or an account receivable, it means that that customer or supplier must have had his record open in the accounting software. Therefore, for account receivable, account payable, and for certain item of accounts, you create the record first. I'm not just talking about account payable. Account payable is a line item, it's a control account. Account receivable is a line item, it's a control account. I mean, under account receivable, is it Mr. Jonah? Is it ABC Limited? Is it XYZ Limited? There are specific customers whose accounts have to be open in the software. So you're going to open account properly for every customer, their name, PO box, email address, phone number, contact person, RC number, whichever details you need to use to identify that customer or that supplier, you record it on the system in that software. After recording those details, you save it. Having saved it, that account now exists. So when you want to debit or credit that account, and you type the code, the account will show up, then you pass your entry. That is how it works. So a chart of account, like I said, is the collection of all accounts, is the architecture of the accounting record in an organization used in posting and processing accounting transactions, and that serve as a channel for eliciting data for financial reporting purposes. On software, financial reports are automated. When you just enter in your sales journal or sales record or purchases record or vendor fee, automatically it is debiting the account that is supposed to be debited and crediting the account that is supposed to be credited. At the same time, you can even pull your report. So it is real time. Posting an accounting software is real time in such a way that enables you to extract a financial report or certain statement at that point in time after posting. That is the beauty. So let's get used to this reality. So I'm going to go ahead to share. I'm going to add a new share to this. And that will be the, yes. We'll be looking at different software. Let me start from the first one. Look at your screen. Look at your screen. When I look at your screen, maybe let me zoom it. Yes. When I look at your screen, this is software in Sage. Look at it, Sage. Everyone, please look at it. This is Sage, Sage 50, Sage 50, right? Now, if you look at this, under business status, right? Now look at account balances. What are the account? Look at account description, petty cash, cash on hand, regular checking accounts, payroll checking accounts. A checking is American nomenclature for current accounts, right? For current accounts, we call it checking accounts. So regular checking account, payroll checking account, savings account, account receivable, contracts receivable, other receivable. Do you see they have codes? Do you see they have codes? These codes are account ID. These are the account code. So if you want to post into petty cash, what do? You click on this account code. You click on this code, it opens up your petty cash, then you pass your posting. That's the way it is done. For example, if you want to post an entry that, okay, what you did, you bought something from a vendor, you come here, look at here, inventory, you come here, and vendors and purchases. When you click on this, it's going to open up the list of the accounts associated with vendors and purchases. When you click inventory and services, you post everything concerning inventory, employee and payroll, things concerning personnel costs, employee benefits, payroll, they are there. That is what we are saying. So in organization, these things already come inbuilt in the software. They come inbuilt in the software. However, they may not come in such a way that they're okay for you. Therefore, every software enables you to, gives you the ability to modify either the description of an account or to, work on an extension of account code as you may want. So this is how it is, for example, under what? Under Sage. Now let me go to SAP. As I'm mentioning them, please, every one of us here, try to be familiar with at least 2 accounting software. 2 accounting software. You can learn them by going to YouTube video to stream how those account software work. Then download the free version, the trial version. The trial version is for you to try them out and see how they work on your laptop. So this is Sage. The next one, look at this. This one is on, this is SAP Financials. SAP Financial. So look at their chart of account, for example. If I come from here, under company code 1, look at laptop inventory code 50,000. Cost of goods sold code 30,000. Account receivable code 45,000. Sales account 65,000. Bank account 2,000. Service account 2,000 also. Account payable 10,000. Rent expense account 800. Electricity expense account 900. Interest expense account 1,000. You come here, this is another example of another company. Mobile inventory account 60,000. Cost of goods sold this. Account receivable this. You see, that is the way. This is uniform. It is common to all accounting software. So this is SAP Financial. The first one I showed up was on Sage 50. So these are where you debit and credit, right? So we don't do it manually. We do our posting by following what we have in chart of accounts. We can modify them, we can extend them, we can add to them, but we need to be familiar. These serve as the architecture for all posting that we do. That is for SAP. Now I go to QB, QuickBooks. Look at QuickBooks, for example. Look at QuickBooks. Look at the, look at the accounts payable components, for example. Look at the account payable component. Start from here. Expense, long-term liability, expense, bank, expense, credit card. So that list will continue in that order. In that order. So these are things you see under what? Chart of accounts. When you see, when they exist and when you certify them that they're okay, you modify them, you've adjusted them to suit your interest. Whenever you now want to post, for example, under QuickBooks, look at where they wrote make general journal entries. Where you want to pass general journal entries, when you click, it will now open up where do you debit, where do you credit, for example. So this is how it appears under what? QuickBooks. We've seen it in Sage, we've seen it in SAP Financial, we've seen it in QuickBooks. Now, lastly, this is Oracle Financial, Oracle Financials. So look at the description. Look at here, they explain for the numbering category. 1,000 to 1,099 are for assets. Do you see them? 1,000 to 1,099 are for assets. Within that category, 1,000 to 1,009 are for cash. So look at the numbering. 1,001 cash. Cash for what? Regular checking. 1,002 cash. Payroll checking. 1,003 cash. Change or petty cash fund. Do you see it? So from range 1,000 to 1,009 are for this sub collection of accounts. For code 1,010 up to 1,019, what do you see? Account receivable, policy fee, late charge, cancellation charge, premium payments, and all of that. Do you see them? So these are the sub-classification of the general category between 1,010 and 1,019. From 2,000 to 2,099, you have the loan category. From 2,000 to 2,099, you have the loan category. Under loan category, you have the current liabilities, current loans. 3,000 to 3,099, you have liabilities. Under them, you have current liability. 4,000 to 4,009, you have equity. So you have stock. Stock means ordinary share. In America, that is stock. They use the nomenclature of stocks. You have 5,000 to 5,099. Those are what? The line item for expenses. 5,000 to 5,009, insurance. 5,010 to 5,019, interest expense. 5,020 to 5,029, mortgage. So these are the way these things work. So apart from what they've done in class, debit here, credit here, they draw a T on the board. They do a 3-column approach on the board. Those things we do in Excel. We don't just wake up and start posting debit and creating what does not exist. There is a chart of accounts in real life. And each chart of account are already pre-programmed into any accounting software you are about to use, any one whatsoever. Therefore, understand this concept of chart of account as we've explained, using that Excel sheet to illustrate. We use it to illustrate. That's one. Number two, as we said, is please ensure you master at least 2 accounting software. Master the chart of account in 2 accounting software. You can do that by going to YouTube video to download and stream. To go YouTube video to watch, right, and stream any of the video on any of these accounting packages. Then number 3, download the trial version for any of the accounting software of choice. It will enable you run through at least for 30 days before the free trial period expires. So that is the beauty, and that is what you need to do in this session. So with this, we come to the end of our session in this wing. Do we have any question? Do we have any contribution or anything that needs to be cleared before we sign out?
Do I want to ask?
I hope,
Hello?
yes. Yeah, I hope I can hear you.
Can someone use phone without laptop run some of those apps?
Can someone use what?
Phone without laptop.
I know for QuickBooks have a version that a trial version you can run using your smartphone, your tablet. I do not know about others yet, but I think they should. So you can use your smartphone, but please, if an accounting graduate, please, if there's anything you must invest in, number one, laptop. If you're an accounting graduate, if there's anything you must invest in, number one, laptop. If you are selling your second phone because you have two phones, please do sell. You need a laptop. Laptop is your work tool. Number one work tool. Besides what you have in your mind. Please, that is very critical. So to answer your question, yes, for QuickBook, I know there are versions you can download and use your smartphone to run, but they're often better. They are better with a laptop. So you can see all the menus, sub-menu, and do some dry runs, some trial transaction, and see how they work. Any other question or commentary? Okay, thank you for joining us. Please tell your colleagues to join us. Let them subscribe to our channel. Let them join our group. Add. In that group, we enable you to add people to the WhatsApp group. Keep adding. What we are doing is to give a hand holding to enable everyone get used to the reality they'll be facing in the real work situation. So thank you, Hope. Thank you, Ali. Thank you, Samuel. Say thank you, Abdullah.
Sorry, sir. I have a
Yes,
question.
please.
How do we get access to the group chat, please?
Pardon?
How do we access the group chat, sir?
Okay. Oh, do you know what? Let me drop my number. So you can look at it right away. Let me drop my number in the chat. So just WhatsApp me, and I'm going to add it to the group. 090-3077-0109. So I'll send in the number. So use that number and WhatsApp me. I'll add it to the group. So you get
Sorry, sir, the number again.
Okay, this is the chat. 090. I said in the chat 090-3077-0109.
Okay, sir. Thank you, sir.
090-3077-0109.
Okay,
So
sir.
tell your colleagues, tell all those you said, those on NYC, those in 400 level, those are waiting NYC, they should join because this is going to really enrich and help them along the way, because the next thing is work. And in work is about what can you do and how well can you do it. It's not about I know it, I'm good at cramming and all of the rest. So that is it. So thank you, everyone. See you in the next episode coming next week, Friday, by the grace of God. Same time, just within 1 hour, we'll be done. Thank you all.
Okay, sir.
Bye for now.